With markets at records, our next guest says it may be too late to jump on board the equity train, but it's not too late for bonds. Let's bring in Morgan Stanley Private Wealth Management's Katrina Simonetti. Katrina, great to have you with us. I'm assuming that a lot of clients are calling you really interested in the markets, and you're saying too late?
Well, absolutely. There's always the fear of missing out, especially for bond investors. With the real rates higher, they see their portfolios underperforming while there is this historic run up in the market, and S&P is hitting a 6,000 mark. But in our view, the key is not to be chasing the rally and taking your time and staying the course and, focusing on quality.
But bonds, you say, have room to run. Where in bonds do you like?
Well, specifically in bonds, it's important to keep an eye on duration and staying middle to short. And once again, making sure that the exposure is to quality. And investors are forgetting that, when they're in bonds, they're in for the long run. So the biggest mistake they can make is when they question whether they should have been in stocks right now. This is not the right way to think about it. They should stay true to their asset allocation because bonds absolutely have a potential to do well, especially with rate cuts on the horizon.
Hey, Katrina, it's Tim. It's great to hear your perspective. I guess ultimately the question is, should investors, though, who have missed out and you've indicated kind of average cost into the equity market over the next 3 to 4 months. So you said don't chase it here, but you do want to be allocating to a diversified portfolio over the next 3 to 4 months. So is it really just about the timing of this? If you're underweight equities here, it's really what I want to get into, because you're talking about the allocation to fixed income, and no, you're not necessarily moving it around today. But would you like to have a better allocation if all things were equal risk to risk over the next 3 to 4 months?
Well, absolutely. When you look at the market right now, it's hard to resist the temptation, but market is up 5% just in the last week, naturally, because the expectation is, the excitement over the deregulation and tax cuts. And all of that is true, but it's going to take some time to play out. So for investors that need to put some money to work and are looking to enter this market, it is absolutely not too late. They just have to do it gradually. They have to dollar cost average, buy on dips, and stay with quality, stay, with very careful stock picking, favor sectors like financials, like industrials, and, stay the course, really be in the well-diversified portfolio, not just here in the U.S., but also internationally.
Katrina, the IWM traded a multi-year high today. It sort of got towards levels we last saw in the fall of 2021. You like financials. Within the small caps, financials play a huge role. So understanding that not all small cap ETFs are created equal, is there a place there in your portfolio?
Well, absolutely. When we look at financials, specifically when we go back to January of 22, which was the peak of the last bull market, financials are up 20% during this time, while S&P is up 25. So we still like valuations. We like the positioning. Financial sector is one of the healthiest stages. We've seen it in a while after the financial crisis because of the capitalizations that we're seeing, plus the deregulation and the fact that the lending activity is being picked up, as well as the M&A. We see it as, resulting in, higher profitability and competitive advantage.
Katrina, it's Karen. Thanks for being on. In case you were working and missed our A block, which was an entirely discussion about Bitcoin and cryptocurrencies, are your clients wanting an allocation in that? Do they have one already? What are you seeing?
Well, a lot of clients are definitely curious, especially, again, the clients that have not had exposure to the sector yet. It's hard to ignore the news. And what we point out to them is that, the sector comes with extremely high volatility. It's not usually correlated, with your more traditional asset classes. So we tell them to tread carefully and once again, kind of gradually invest and allocate a specific allocation that maybe, would not position the portfolio to experience excess risk, because those who have been invested in Bitcoin quite some time, we've seen it come up, but we also see significant declines.